Hello, welcome back to WinFS Trading YouTube channel, the only channel that has been optimized to make you rich trading the foreign synthetic market. In today's video, I'm gonna bring you a brand new topic that's going to change your thinking and psychology in trading. Actually, this is applicable in both forex and synthetic market. Before I continue, if this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notifications so that you get notified each time I upload a new content. Try to like and share to your network. Um, Actually, if you don't have a broker that offers synthetic market, because you see every video I do, like most of the video I do, the title will carry Forex synthetic. So I teach both forex and synthetic markets. So if you don't have a synthetic trading account, check down the description of this video. You will see the official link to create an account. Okay, you get an account and you start trading synthetic. And if you want to trade forex as well, there is a link to start trading forex in the description. That is Esnes, the broker that you will use to trade forex. Esnes, and the broker that you will use to trade synthetic is Deriv, and the links are there. Don't go to Google. Use the link to avoid meeting clone size. Okay. Um. So the topic we shall be discussing is power of Z slash continuity factors and forex synthetic trading. Power of Z slash continuity factors in forex synthetic market trading. Okay, the Z is necessary for change of character in forex synthetic market or for continuity factor analysis. Continuity factor CF is based on number of reactions to a resistance or support level in relation to resistances in relation to reactions at previous resistance and support. CF equals to current support or resistance reactions all over closest previous support or resistance. We also need to calculate the breakout factor BF. BF equals to breakout output length all over breakout input length. Okay, that's the formula. And we shall be using this thing to study continuity and the reversibility behavior of the market. If CF is greater than 1 and BF is greater than 1, then the market is continuous. And if you are using moving average loops, you will also know that the market is continuous. Okay, by the time I go to the chart, I'm going to teach this, and you will see the practicability. We shall be using moving average for modulation in order to understand the meaning of these inequalities. Okay, if CF is less than 1 and BF is less than 1, then the market might reverse. If CF is greater than 1 and BF is less than 1, then the market might reverse. But if CF is greater than 1 but BF is greater than if CF is less than 1, supposed to be less than, if CF is less than 1 and BF is greater than 1, the market might continue. So when you see the word might, it is probabilistic. In fact, all these inequalities should represent probabilistic events, but they have statistical edge when you obey what they provide, the information they provide, the condition they provide. you'll be on a statistical, on a better statistical edge. You'll be on a better statistical edge. Basically, you have a positive statistical edge. You can lose some money, but when you win big, and your winning will recover your losses. Okay, and that will be based on the risk reward, which I'm gonna teach in the practical part of this video. Okay, so I will start with a synthetic market and we'll go over to forex market. Basically, we shall be doing this analysis in the H4 time frame. H4 time frame, so that we get a valid result. Now, first of all, what you need is to study the trend of the market, because we're gonna follow trend. Okay, we need to study the trend of the market. And we actually need to understand trend as what you are seeing in front of you. You have to understand trend as what you are seeing in front of you, and how does it relate with what you can see in the past. In the past, how does it relate to the past, to the path in the past, like to the length or path in the past? Okay, in the past, how does it relate? What is the interaction? Okay, you need to study this. Right now we are talking about Z, um the power of Z in trading. Okay, if market creates a move like this, I'm going to let me delete the objects. If market creates a move like this, it is up, right? Then it have to create a reverse move at an angle, which can vary. This angle varies, but basically it cannot be 180 degree. Yeah, it can be 180 degree if the market is ranging horizontally. So you know, it will range between 0 to 1. It will range between 0 to 180 degrees. Okay, and then it will create something like this and then do something like this at an angle. Okay, so if you look at the shape of this, it's not a perfect Z, but it resembles a Z. Okay, so if you are now studying the geometry of this, you see that this is vertex, I'm sorry, this is a vertex, this is a vertex. They become turning point, right? So they become turning point. When this happen, what it shows is that market can come towards this level and continue going up. But in most cases, it can still come back to this level and continue going up. 80% of the time, it will come to this level and continue going up, and 20% it will come to the other one. So this one, this one, this one here is a higher low, while this one here is a higher high. Okay, this is also a high, but this one is higher. Also here we have a low, but this one is a higher low. So that's the basic definition of Z. Okay, that's the basic definition of Z. Let me start it again. If market is coming down, I've done with upwards movement. Let me repeat it again. My market went up, dropped a little bit, and went up again. Okay, this starting point is a low L. This point here is a high, a hedge. Then this is a higher high. Okay, because it break above the previous high, and this is a higher low. Okay, But in most cases, what we are when a Z creates, what we are now looking at is interaction to either this high, here, or um, this higher low. Okay, so 80% of time price will drop here and continue going up, while 20% of time price will drop to this one and continue going up. So that is the basic thing you have to know about Z. Okay, now what if we have a scenario like this? Price drop and go up a little bit and drop again. Okay, so we have our this initial point is a high, and this place is a lower high, LH, and this is a low, and this is a lower low. In this scenario, what we expect, the market have created a Z. We want the market to come either to test here and continue going down, or to go up and test this one and continue going down to break levels. It will continue going down, like it will break more levels. Okay, this is the basic meaning of Z. But this thing doesn't happen as smooth as you think. The liquidity sweep, smart money manipulations, big banks, big box manipulations, or stop loss hunts will make you to lose multiple times trying to follow this idea. I think you really need to subscribe to an expert signal provider for you to actually, uh, grow your equity to uh, substantial amount, and you cannot trade on your own. And we have several groups you can join, start changing your life. And basically, we're on Telegram, and we're gonna help you out. Okay. Right now, you have actually understand the meaning of a Z. Okay. Now, what if in a scenario we now have a high level, a complex system whereby a market go up and drop and then go up, and then remember it started from here, that's the starting point, and the way it is retracing, it dropped like this, it break this point here. This is a sign of change of character. This is change of character. That is what we mean by change of character. Okay, even if it violate this one, I don't want to use those terminology, higher this or lower high or lower low. At least you should, you know, intelligently follow me. So just look at the practical and learn the practical. Okay. So instead of it to, apart from the fact that it violated this level, it still come and violated this level. So it violated two levels. Violation of two level is a sign of change of character. So it is called change of character. Okay. Now, what you need is for this point, it will drop somewhere here and then it will start going up. Not necessarily to come here, but basically it's going to an arbitrary position that you cannot be able to predict where that position is. But the only way you can be able to predict it is if you start creating resistance or support, you know, at certain level, then you can say, oh, this level is holding price and you are going to continue going down. So you will now see that uptrend has changed to downtrend, and this variable keep occurring in market from time to time, and it keeps making people to lose money. The reason I say this is some people will still think the uptrend is active and they keep buying this market while it is ready to sell. I think using Fibonacci tool will help you to know when market is changing character. Yeah, you can use Fib tools to know when market is changing character. Okay. I'm going to show you if we okay. Let's open Fib 2. Let's open Fib 2. Okay, let's open Fib 2. Um so we have a market that will trace to here and then move up and start coming up. I'm sorry, start retracing down, start coming down. Now we have this level here. So you see the market came to this where it break level 61.8. So breaking level 61.8 is a sign of change of character. Okay, because it break level 61.8, which is golden ratio around the price of 3096.096. That's a sign of change of character, but the truth is that this market continues going on. Why is it that the character didn't change? Is trying to tell you that Fibonacci 2 is not the only thing you need for you to predict the change of character. Yeah, it's not the only thing you need to predict to measure the change of character. Okay, but in most cases, when such thing happen, the market will change direction. So you need other two. That's why we experts, we know all these things, and we know how we handle tough situation in the market or unpredictable situations. We know how to develop high level analytical tools in order to come out of those problems. um I will continue with a situation of a downtrend. We have a market um that dropped like this, went up and dropped. Okay, so it has, this Z is downward Z, right? Because the market is making a lower high and lower lows. Okay, but if by right we have this level, and then this level, these are very important level. So we restrict price to either come to this level and continue going down, or to go to this level and continue going. Anytime price shoot up like this, and like if price shoot up to break this level, all these level are resistances and support. If price shoot to break this one, then it is a sign of change of character, and then all we need is some formal retracement to some arbitrary point, which you can validate with resistances and support that is going to form. Yeah, and then the market have changed trend. That means you continue the market to the upside, meaning that a downtrend have changed to uptrend. Okay, um that's good. But the major thing I want to teach in this video is still coming. We are talking about continuity and breakout factors and how to use it to test for continuity, the reversibility of market. Okay. Uh, right now, when you know the trend of the market, that is when you are going to apply this tool. Okay. When you know the trend of the market, uh, ever since price break this level, ever since price break this level, it means the market have changed character. Basically, if you want to know what's happening here, we have a move to this side. Look at what is happening here, and we have a move to downside, or a V. I mean a Z, and we have another move to this level. And so this move, you see that this was a low. Here was a low, and this this one, this one is a higher low because it's higher than this low. This is also a high. So we see price breaking up to this point. Okay, we assume that the first break like this one is may not be serious, and then we notice another break. So we can now extend this. We can now extend this to this level. Okay, so this is a Z. Okay, this shows that the markets have changed character to the upside. This is a sign of change of character. Now we have a retest. So this retest just ended with this level. With this level, it didn't attempt to violate the level in order to come to here. And so after that, what happened? Because a downtrend, you see that the market was previously downtrend. So a downtrend have changed to uptrend, and you can see the continuous movement. Up till now, the price is still going up. Okay, now how do we apply continuity factor and breakout factor? That is when you know the trend, when you know the direction of the trend, then you have to be applying continuity and breakout factor to sustain the direction. Okay, so that you can stack position. That's what we call stacking method. I think that is one of the ways you can stack position. Okay, so the most important thing you need to do is to wait for a clear breakout to happen. Wait for a clear breakout to happen. Okay, so we have a breakout here. There is a clear breakout here, and we have another breakout here. Okay, and then we have mark all the breakout and carry out this analysis. We have a breakout. We have a breakout here. We have a breakout there. Okay, so we also have we have a breakout here. You can see we have a breakout here. Okay, that's a breakout there, because for price to come and retest that level is a breakout. You know, there is no mixture of bearish and bullish candle here, but for the fact that price touch here, this is a breakout, so it's an advanced idea. Now remember the formulas we have discussed. The question now is, in how many ways should I have taken this trade? This trade, you see, it was a buy, and it was able to generate 200 over 200 pips. Okay, in how many ways should I have taken this trade, and why should I take it? Okay, so if I want to carry out the CF analysis and BF analysis, I'll consider the most, like, the closest resistance or support. Since the market is uptrend, we are actually considering support. Okay, so this is the support. How many reaction do we have in this support? You see, the question now is, how do you draw the support zone? Okay, you look at the wick in the breakout zone, the breakout symmetrical line, like where the breakout happened. You look at the height of that wick. I think extend it, extend it, use it to uh, measure the width of the rectangle. Now when you measure this, you can see that I've done this. If you look here, I use the wicks. You see, I use the wicks. Okay, just try to understand how to do this. So right here, the price came here once. So we have one reaction there. One reaction. So because we have one reaction here, in the current the current support that the market have created, we also have one reaction. Okay, we have how many reactions there? We have two reactions because this week was rejected from this level. I see. So it is one and then two. Okay, so we have two reactions. So 2 over 1 is equals to 2 and 2 is greater than 1. Now the next thing is to measure the breakout factor. Now from how to measure the breakout factor is you need to calculate. Remember the formula? Let's go back to the formula so that you'll be able to know what I'm doing here. So remember this formula that BF is breakout output length over breakout input length. So how do we measure the input length and output length? You start from that current support or resistance. So this is the current support. Just measure from the lowest low in that region and that support division to the highest height reach. So this is the highest height. So we have 360.8. About the length is 360 pip. Let's forget the decimal part. 360 pips. Now measure like the input length. This input length will be the distance before, like when you measure from where the breakout started, like a swing, whether low or high. In this case, it's low because it's uptrend, right? So you start from here and you measure to where the beginning of the zone that was broken. So we have 277. So 360 over 277 is greater than 1. Now this shows that the breakout factor is greater than 1, is like both breakout factor and CF are greater than 1. So the market is going to be continuous. What you are going to do is, if this market come back to this zone, you are going to buy and your take profit will be what? Your take profit will be on the next key level. Make sure you cover as much rejection as possible so that you will not be faced with change of trend. Okay, so you can put your take profit around here. Okay, so that's good. That's good. You know, the general rule of thumb is you cannot reverse markets on your own unless the market reverse itself, meaning that most traders that trade the market that is already flowing in a given direction succeed than those that try to trade against it, maybe for some reasons. Even when market reach certain key levels, they don't actually reverse at those key levels. They create range period, they range near those levels most times and even break it before they start changing direction. And this happens 70% of time and people lose a lot of money. So that's good. Thank you for coming to NFS Trading YouTube channel. You know, thank you for coming. I forget something. I'm not closing now. I forget something. I need to shake Forex market. I'm sorry. It's not time to start, closing. I know with this is taking time, but I need to touch Forex market. I forget. Okay. Let's go there. Okay, this is GBP and basically the market was downtrend before, all the way from here to here. It was downtrend and we have this change of character here. Price just break this level. Okay, so basically we had a move like this. We have a move like this and we have another move like this. Okay, we are going to take this and then we have a move like this. Okay, and then we have a move like this. Like I'm following this path. a move like this. This is a Z, and the market this market was making lower lows. This market is downtrend. Okay, because the this is the swing here, so it went down further, so it's downtrend. But what happened here is change of character, because it break this line and then give us a retest. So this is change of character, and then when you give us a retest, it's actually the retest ended here, ended on this line, uh instead of coming to this uh this 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 level, it just ended up here. Okay, that is where it becomes saturated and continue pushing up, because I said something. If a market goes down, if a market goes down like this and then it goes up and then drop, that's what is happening here, and then drop. Okay, forget that the market was going to the same level. In real sense, one of the level have to go down. You can push it down so that it went up like this. So this one that went up here could have just ended here, so that it will become a clear downtrend, but in practice it's downtrend, and then at least price break this level, right? So it's downtrend. Okay, so we have something like this. Now price went down, and like it just went down further. See, it came to this level. That means it breaks something. Okay, it break something. Now this thing is break. Instead of price to come and respect this alone, it just, instead of it to come and respect this one, it just move up straight to this and break it. So it's a sign of change of character, and that's what's happened. So it have changed character. Okay, it have changed character. Now because it have changed character, the market is now uptrend, right? Now we need to study breakers and just measure the break. We have a breakout here. Okay, so there is a breakout. Let's delete this. There is, we have a breakout here. Okay, we'll study further breakouts. So we have a breakout here, price break. See, I'm drawing it. Okay, there's a breakout. There's a breakout here, price break here. Okay, can we extend this to touch reaction? Take for instance, you see, let's make things so simple here. So we have a breakout here. Now we have another breakout here. Okay, we have another breakout here. So in how many ways are we going to get signal? That's the question. Using this BF and CF. Okay, assuming that you are looking for a signal here, I want to get a signal here. What you need here is to ask ourselves whether this market will continue. So we are going to measure a number of things. First of all, let's start with CF. So we are trying to judge what is going to happen on this level with respect to this level, right? So what is our CF here? How many reactions? So in studying this CF, we need to mark as much resistance and support as possible. We have a resistance here. Okay, so Right here, we have how many reaction to this level? We have one, two, three. We have three reaction to this level. Okay. Now we want to we are going to use we need two levels to make um conclusion, right? So we're going to use and this and this. So let's debut this. So how many reaction do we have here? We have one reaction to this level, one reaction. And on this current level, how many reaction we have? One. We just have one because this one should have been our signal. Okay, if we have run the calculations, right? So we have one. So we have one here and then we have one. So 1/1 is one. Okay, one greater than one and one can be taken to be the same thing. Okay, I'm going to update the notes later. It can be taken to be the same thing. So what is the breakout factor? Okay, so we have the breakout interface start from here, and then we have a maximum height of 280 pips. Just forget the decimal part, 280 pips. But previously, the input length was from here. It was from here to here. You measure from here. You know how to measure the input length. The input length should be you start from a swing. You start from a swing. Okay. You start from a swing and you measure it up to where you measure it to the you measure it up to the breakout interface, the nearest boundary. So this is the boundary. So we're having um oh, I'm sorry, we are actually taking this from this swing here. So we measure from here to here. So we are having about 118 pip, and 280 over 118 pips is a sign of strength. It's greater than one. So your area of entry is just this level because the level is strong. Price reached there and couldn't continue going up, right? So you just enter here and you keep measuring this CF and the BF. And as you measure them, you add position if they give you condition to add position. If they didn't, then you have to come out of the market. But running top-down analysis can also help you to tackle some issues on not having the long-term view of the market. Okay, today GBV's JPY is trading at 203.293. Okay, so it's a great stuff. You see what's happening here? Market break this level. Market break this level. Price actually break this level and extend it, and then create a new high, and this is a new high. So price this see this new high, price break it. Okay, price break it. So if we have to study stuff, we need price to come and react here. It has already give us a reaction. There's a reaction here. Okay, now what is going to make us to believe that this market might continue? Okay, first of all, uh you measure the we are studying these two levels. We are studying these two levels, and from here the price, the input breakout is here. It's giving us around 5,097 pips, and the output breakout is still running. It is not completed, but we have around three close to 400. So by the time it finishes and starts retracing, we will know the length. Then if the length is greater than one, then we consider the CF. If the length is greater than one, we consider the CF. And well, for we to run the CF analysis, we need to know the number of reactions here. The previous, not like on this level, I mean in the forward part. So we have how many reactions here? We have one, two, three, four. We have about four reactions. Okay. So for this level, we only have one. Okay. Now the CF will be um 1/4, which is less than 1. If you go to the condition, if CF is less than 1 and BF is greater than 1, the market might continue. So in this case, because CF is less than 1, you know, it means the market is not reacting too much on the current level. When market is not reacting too much, it's a sign that it might change direction. Okay, because a strong level resistance or support is the one that have multiple reactions, at least more than two or two, you know. So that's good. Thank you. Keep coming. Join our VIP. Join our VIPs. We have up to 4 enroll for our courses. Remember, WinFS Trading is here for you to win steadily. We have a lot of robust boom and crash, especially boom and crash market is something that supposed to build your capital for you to trade forex markets and other assets, even stock market. Boom and crash is straightforward, it's easy. I don't know why people are losing. Get our robot today and change your life. The name of the robot is Boom and Crash Winning Robot. It's a winning robot that never loses. It provides you with the buy and sell signal at a higher time frame. That's the best thing. That's the good thing about this. The signals come for a higher time frame, meaning that you can't lose here. There's no loss. Okay, thank you, and bye for now.